This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Hold on to your hats. The summer heats up, and so does stock market volatility. The Dow posts its 7th triple-digit swing in the past 11 sessions, and market watchers say get ready for more.
The heat gets turned up on the banks and the hundreds of dollars in overdraft fees you may be racking up each year.
And putting your money where your foot is. A hot stock that was once anything but. What's behind the 1,000% run-up in shares of a big box shoe retailer? All that and more tonight on Nightly Business Report for Tuesday, June 11th.
Good evening, everyone. Volatility was the word of the day on Wall Street and on the streets of Istanbul. Concerns about the world's central banks, including our own Federal Reserve, pulling back on stimulus plans caused wild swings in stock markets all around the globe. U.S. stocks fell sharply right at the open. The Dow was down 150 points after the yield on the 10-year Treasury spiked to a 14-month high following the Bank of Japan's decision to make no changes in monetary policy. But investors swooped in on those early dips, even sending the Dow into positive territory for a time. Now, Wall Street's attention later fixated on violent protests in Turkey as police used tear gas and water cannons to clear demonstrators in Istanbul, rallying against Turkey's conservative government. U.S. stocks fluctuated as the scenes played out on television. By the close, the Dow tumbled 116 points, the Nasdaq fell 36, the S&P lost 16 points. And
later in the program, we'll speak with Karen Feinerman, president of Metropolitan Capital and author of the new book, Feinerman's Rules, about today's markets and more. Well, the U.S. Senate today voted 82-15 to begin clearing the way for formal debate on a massive 900-page measure overhauling the nation's immigration laws. President Obama, surrounded by business leaders, among others, sounded optimistic about Congress passing the controversial bill soon.
Smarter enforcement, a pathway to earn citizenship, improvements to our legal system. They're all common sense steps. They've got bipartisan support. They've got the support of a broad cross-section of leaders from every walk of life. So there's no reason Congress can't get this done by the end of the summer.
One of the business leaders attending the White House event was Steve Case, former chairman of AOL Time Warner and a strong supporter of immigration reform.
It's very important that we continue to be a magnet for talent, that we really become the place that people want to start companies and start industries, because that's the best way to drive our economy, best way to drive our economic growth, best way to drive down our unemployment. We've got to make sure we are able to attract those risk takers, the pioneers who really believe in America as the most entrepreneurial nation in the world.
Our guest tonight was also at that White House event with President Obama. Gary Loveman is the CEO of Caesars Entertainment and a member of the Business Roundtable, which has been lobbying for immigration reform. Gary, so nice to have you back on the program.
Pleased to be here, Susie.
All right, so there's been a lot of anxiety, as you know, about immigration reform. Why are you and the Business Roundtable such big supporters?
Well, because we think it's good for those that are affected by the current broken immigration system, and it's certainly good for business. The president's proposal and what the Senate is considering has three central features. The first is to enhance border security very meaningfully. The second is to deal with the 11 million undocumented immigrants and their children who live in the United States today, whose circumstances are ill-defined and certainly not functional for anyone. And the third is to rationalize the immigration system prospectively, so as Steve Case pointed out, we access the world's greatest talent and bring them here for their best work. And I think for all the simple reasons that these three ideas suggest, it's good for everybody.
Talk to me about a pathway to citizenship, which is part of the proposed legislation that would involve those 11 million undocumented workers or residents finding a way to get legal here in this country. What should it include, in your view?
Well, the president's proposed that it includes, of course, making sure that no one has any criminal offenses against them, that they command English that they pay their taxes, and they are regularized, in a sense, in American life as they petition for inclusion in the queue to move forward toward citizenship. And I think all those standards make a lot of sense. The president's also proposed that these folks come in behind the queue that exists for those that have pursued legal immigration. So you can imagine a feathering of those that are coming in through traditional mechanisms, along with those that are moving ahead under the newly proposed mechanism.
Gary, I want to get back to the point about the economic impact of all this. I mean, certainly immigration is a problem that has to be fixed. But, you know, what do you say to people who are worried about, especially Americans who are out of work, who are looking for a job and can't find one, and they're worried about the economic impact at a time that our economy is weak and we have these huge deficits?
Well, I think that's a little bit of a false concern. I think on the one hand, as Steve points out, we are losing access to some of the great minds that could help propel entrepreneurship and innovation forward. There's a lot of very highly specialized skills where we have an insufficient supply of people available to work, even with today's high unemployment rate. And I don't believe that the regularization of the existing undocumented folks would lead to a substantial supply that would compete for those that are seeking work here. On the other hand, and I think more importantly, Susie, having a regularized immigration system will enhance demand for goods and services for companies like mine and many others, and particularly for the housing market, which is essential to the restoration of growth in this country, that would lead to a better outcome for everyone, including those that are seeking work.
What would this immigration reform mean to your business? You alluded to it just then.
Well, I think, first of all, it would enhance the demand for our services by folks who would find their circumstances in this country predictable. I think it would lead to a greater level of innovation and entrepreneurship among folks that would be staying in this country because they'd like to do as Steve proposes. And I think also in terms of our being able to find the most talented people to serve our guests and drive our company forward, we'd have better prospects for that as well. So I think on the supply side and the demand side, it's a very sound argument.
Gary, thank you so much for coming on the program. Great to have you.
Glad to be here.
Gary Loveman, Chairman and CEO of Caesars Entertainment.
Well, small business owners would have a lot riding on new immigration rules as well, and right now they're feeling a bit more optimistic about the economy apart from immigration. The latest survey from the National Federation of Independent Business shows that small business owners report improvements in outlooks for job openings, capital investment, and inventory building.
It looks like more American companies plan to hire more workers next quarter, the largest amount of new hires in one quarter in nearly 5 years. That's according to the Manpower Group, a global employment service. Meanwhile, the Labor Department says advertised job openings fell 3% in April, and that the number of Americans who quit their jobs spiked 7% that month. But economists see this as a good sign that workers who quit usually do so to get better jobs.
A new report from Washington's financial watchdog agency says consumers now pay more than half of the charges on their checking account fees in the form of overdraft fees. Moreover, the study found that customers who opt in for overdraft protection paid hundreds more in fees and had their accounts closed more frequently than those who decline it. Kayla Tausche has more on how banks are raking in those fees and what you can do about them.
It's that pit in your stomach when you look at your bank statement. That check you wrote was cashed early, or your deposit hasn't hit yet. Either way, that $3 cup of coffee just cost you $38. For more than a year, the Consumer Financial Protection Bureau has been studying this, the way banks charge consumers for overdrawing their accounts, and how the banks disclose these practices to customers. The findings? In a year, someone who overdraws his or her account will face an average $225 in fees. Those who frequently overdraw, more than $900. Those fees hitting many who opt into so-called overdraft protection programs, themselves rife with red tape. For customers, it's a sensitive subject. With banks already charging high fees and balances to maintain accounts, multiple overdraft charges, now representing 60% of account revenues for banks, seem like pouring salt in a wound.
If you mismanage your account, you're charged accordingly. But if you do it once every blue moon, really there's no big deal, and they shouldn't charge you a massive whack for that.
It's a little outrageous. You know, this is just another reason, another way that banks, you know, kind of stick it to the consumer. These are nickel and dime things that they use to make money, and you know that adds up to millions and millions of dollars.
Make that billions of dollars. According to MEB's Investor Services, banks raked in $32 billion in revenues just from overdraft fees. Not surprising, considering the majority of banks charge $35 a pop each time an account crosses into the negative. Banks have said they shouldn't have to pay balances for accounts with no money coming in. Customers say there are better ways to keep account holders honest.
It should just completely stop it at the point where it says, you know, you're not allowed to draw money at this point.
I think it should depend on how much you overdraft, like a percentage.
The CFPB, in its report Tuesday, did not say how or whether it would regulate the practice going forward. It did say the investigation into overdraft fees is just beginning. For Nightly Business Report, Kayla Tausche, New York.
Sweeteners and poison pills lead our market focus tonight. SoftBank raised its bid for Sprint and Nextel by $1.5 billion and added poison pill conditions in an effort to close out rival bidder Dish Network. Shareholders vote on the deal in 2 weeks. Sprint shares gained more than 2% today and more than 28% since last October when SoftBank made its offer. Another set of shareholders at News Corp voted today to split the company in two on June 28th. News Corp will become the name of the publishing assets, while 21st Century Fox will be the umbrella for the TV networks and the film studio. News Corp has gained more than 66% in the year-long run-up to the split. Shares were down a fraction today, closing at $31.67. Catamaran, the pharmacy benefit manager, landed a 10-year deal with Cigna to manage prescriptions covered by Cigna's plans. Catamaran shares jumped almost 11% to $53.99 on heavy volume.
Questcor Pharma, a big mover today. In a deal with Novartis, the company acquired a treatment for autoimmune and inflammatory diseases licensed in 40 countries. Questcor said it plans to seek U.S. approval for the drug called Synacthin. Questcor shares spiked pre-market and traded at 10 times normal volume, closing at $42.11. That was a 15% or so move. And yes, he has some bananas, and now 90-year-old David Murdoch, CEO of Dole Foods, wants to buy more of them. He owns 40% of the company and wants to buy the rest for a little more than $1 billion. Murdoch told the New York Times back when he was 88 that he wanted to live to be 125. Not sure I'd bet against him. Investors took Murdoch very seriously today, bidding Dole shares up more than 22%, as you see there, on heavy volume. And still ahead, the big risk facing some of the biggest media companies and the lengths they're going to fend off the competition. But first, how the international markets close today.
The Energy Department says that the world has leased a decade's worth of recoverable shale oil reserves underground. The government estimates there are about 345 billion barrels, or roughly 10% of the world's crude supplies. The report found that Russia has the largest reserve of oil resources in shale formations, followed by the U.S., China, Argentina, and Libya. Well, a car that doesn't need any gasoline got just a little less expensive for buyers. General Motors is lowering the price of the all-electric Chevy Volt by $4,000, hoping to lift stalling sales. If you combine these new price cuts with the $7,500 federal tax credit for electric cars, a brand new Volt will now cost you about $29,000. That's 25% below the sticker price.
Take that, Microsoft. Sony today unveiled its PlayStation 4, its first new game console in 7 years. But that's not all. The company said it'll be priced at $399 in the U.S., $100 less than Microsoft's Xbox One announced yesterday. What's more, the PS4 won't restrict used game sales or need to be hardwired to the internet during games.
The national cable show is underway, and the big topic is whether high bills will push consumers to cut the cord or drop their cable and satellite services in favor of streaming video, and what cable companies are doing to prevent that trend. Julia Borston has more from Washington.
At the heart of concerns about rising cable bills are sports, the rare type of content people must watch live in real time. That means sports costs are on the rise, and ESPN is the most expensive channel. Also pushing prices higher, new competition from Fox Sports 1, which News Corp is launching in more than 90 million homes in August, and Comcast NBC Sports. Industry analyst Craig Moffett warns that high sports fees are driving cable bills so high, consumers could cut the cord. To prove its value and keep subscribers hooked, ESPN is offering more mobile access to live sports to its subscribers, even considering paying mobile carriers to make it cheaper and easier for ESPN subscribers to watch more mobile video.
Our intention is always to make it as easy and as convenient for all of our consumers to consume all of our content across all platforms at any time. We're not in active discussions, but we have explored whether our helping to subsidize wireless usage would be helpful in their doing that.
While ESPN requires that sports fans log in to access all that mobile content online to make sure they keep paying their monthly cable bills, other cable giants are hedging their bets against the risk of cord cutting. Discovery Communication is establishing a bigger online presence, giving away more content for free with ads. Discovery Communications recently launched an online-only network called Test Tube, targeting young men, a demographic that's hard for TV advertisers to reach. They'll be available on its website and through Xbox, Apple TV, Roku boxes, and the like.
We're playing very aggressively in the traditional cable space, but anywhere consumers are consuming content, we want to play. And so we're not making money in that space yet, but we have the leading streaming video business in the U.S. And I think for us, in terms of where the world goes, it's important for us to stay contemporary.
And staying contemporary is all about offering consumers content where they want it, when they want it, on any device. The question for the future of the cable industry, whether companies demand consumers keep paying their monthly cable bill to access that content everywhere, or whether they think the ad revenue from new digital ventures will create a new viable business. For Nightly Business Report, I'm Julia Borston in Washington, D.C.
Google is striking back. The company has asked the U.S. government's permission to report publicly on the volume and scope of court orders requiring it to hand over information about its customers. The unusual request in a letter to the Attorney General and the head of the FBI comes in the wake of disclosures that internet companies had received those secret intelligence-related requests about the activities of users. The company is fighting back against allegations it gives the government broad access to user data, such as which websites they visit. Well, our next guest runs with the big boys on Wall Street. In fact, more often than not, she outruns them. Karen Feinerman is president and co-founder of Metropolitan Capital Advisors, a New York-based investment management firm, and she's here to talk markets and also about her latest book, Feinerman's Rules: Secrets I'd Only Tell My Daughters About Business and Life. She is the mother of 2 sets of twins, by the way. But first, let me ask you, what is the market telling you in recent days?
Oh, you know what? I don't love what the market's telling me, actually, in recent days. We had gotten to a period where we had some non-correlation, where things traded on their fundamental values. Each stock's particular story was what moved it. And now when you have these macro events, it's been quiet on the macro front for a while, but now you have these macro events, particularly, is the Fed going to taper soon? And Japan, which for one of the world's largest economies, that market seems to be somewhat out of control. That sort of volatility, we don't see that normally in a market that is as developed as Japan. So I don't like seeing those two big macro things on the horizon, because then you start to get into this, everything's correlated to one. And what we're doing, value investors, that's very hard when everything correlates to one.
So let's go from macro to micro. Where do you see more risk, in the stock market or the bond market? And what should investors do? This is a very confusing time for most individual investors.
It is. I mean, to me, the bond market seems particularly scary to me. I feel like you can find value with dividends, if that's your interest, no pun intended, value with dividends in the market. But this bond market, that to me, I think Jim Grant once referred to it as return-free risk. And that's not for me.
Right. And bonds today at 14 months highs on the 10-year, in the 220, 225 area on the yield. So I wonder where you would peg bond yields at the end of the year. How much higher do they go?
I don't know. I hope they're actually higher, because I think that would be coincident with the market, with the economy improving. But just today I had a conversation with a REIT CEO who said, I can't believe we got a financing done at 3 3/4. I can't believe that's what we paid. And so that would make me not want to be on the other side of that trade.
Let's turn and talk to you about your book that you've just come out with. I find that the women I come across these days that are just coming out of college or just entering the workforce are much more open and upbeat about all the opportunities that await them, and it's very refreshing. So I'm just wondering, what would be your advice to this new generation of women?
I think for me, what I was trying to give advice was about staying out of your own way or getting out of your own way. And I think sometimes women aren't their best advocate, and they need to be. They are in charge now. No one else is in charge. You know, you've gone through your life through college, maybe with a plan and a roadmap, and there's no clear roadmap anymore. So they have to be in charge. They have to speak up for themselves. They have to take some risks. And
that's true
challenges.
whether for any woman at any stage and any man.
Any person. But I think women sometimes are being risk averse. I think also makes them hold back somewhat in their careers.
Let's put a little word association. Sheryl Sandberg.
Powerful.
Lean in?
Lean in. Almost all of the book I completely agree with. Particularly, it's interesting to me when she talks about as women get higher up the corporate ladder, they're seen as less likable.
Paul Tudor Jones, trader who said women couldn't really be the equal of men as traders in a certain narrow context.
Candid. I would say misguided.
Let's talk about when you think there will be a female CEO of one of the major money center banks, Goldman Sachs, JP Morgan, Citi.
I would have thought when I started on Wall Street almost 25 years ago, we would have seen it. I think we are a decade away, at least.
Why is that?
Really?
Real quickly, why?
I think that they're not building up the ranks quickly enough. The math isn't there. There's not enough. The bench isn't deep enough yet.
Women have to lean in more.
Yes,
on Wall Street.
Karen Feinerman. Feinerman's Rules, secrets I'd only tell my daughters about business and life. Thanks very much for being with us.
Thanks for having me.
Great always to see you.
And coming up on the program, if the shoe fits, you may want to wear it and own its stock too. We'll take a look at what's driving the comeback of shoe retailer DSW. But first, let's get a check on how commodities, treasuries, and currencies fared today. Whether you're flying or walking, everybody needs shoes. And when an underperforming footwear discounter figures out what its core customers want and rewards them for coming back, shoppers and investors both benefit from the turnaround. In NBR's latest installment of Comeback Companies, Jackie DeAngelis takes a look at DSW.
If you discount it, they will come, especially when it comes to buying shoes at big box retailer DSW.
The prices are good, the styles are great, and it's such a large selection.
This stock has made a comeback all right. Share prices have run more than 1,000% since the stock hit a low a little over 4 years ago. Behind the retailer's success, an evolution through execution. Just part of CEO Mike McDonald's vision when he took the helm in 2009 amidst an economic downturn. Several key strategies driving growth at DSW, including a focus on operating efficiencies, marketing, and breaking ground on new stores. Today they have 377 national locations. They plan for almost 400 by the end of the year.
But perhaps the company's greatest success, catering to its core customer with deep discounts and a rewards program when consumers need them most.
It's a very simple program. It's very easy to sign up, and essentially after you spend about $150, we will send you a $10 certificate good on your next purchase.
It's beneficial, and I don't have to have a card, you know, I just give them my phone number and I get a coupon in the mail once in a while, which then I can use.
What's on deck to drive growth forward? Enhancing the customer experience through what DSW calls an omni-channel, making shopping seamless between in-store, online, and mobile. The company is also experimenting with smaller stores.
We will be testing smaller format stores that we could use to both infiltrate smaller markets and to fill market voids that might exist in existing markets we serve.
And DSW continues to focus on its e-commerce strategy.
In 2009, the business was good, but we weren't making any money. And since that time, we've continued to grow it, and now it's a very significant contributor to our bottom line.
But when sales rely on consumers, there always are risks.
Things like higher taxes, higher gas prices, particularly in the Midwest. I think early in the year they worried about some of the national budget concerns, the sequester, all of that.
Still, most analysts that cover the stock rated a buy, some projecting long-term earnings growth of 15 to 20%. For Nightly Business Report, I'm Jackie DeAngelis.
And finally tonight, you may be too late if you were looking for a very specific used copy of the great American novel as a Father's Day gift. A first edition of the F. Scott Fitzgerald classic, The Great Gatsby, sold for $112,500 at Sotheby's in New York City today, right about in the middle of the pre-auction estimate. The buyer wants to remain anonymous. DiCaprio, no, not really, says the book appears to be in very good condition and has handwritten notes and corrections from its original owner, the critic and novelist Malcolm Cowley. How about that?
Only F. Scott Fitzgerald knew, because he died feeling a failure.
Is that right?
And he felt like his literature wouldn't outlive.
Do you agree with Karen Feineman? It'll be another decade before there's a women's CEO?
I hope it's sooner than that.
Yeah.
She knows best, but I hope it's sooner than that. That's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for watching.
And thanks from me as well. I'm Tyler Mathers. And have a great evening, everybody. And be sure to log on to our website, nbr.com. We'll see you back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. It was a volatile day in the markets on concerns about whether the world's central banks will start pulling back on stimulus plans and on violent protests in the streets of Istanbul, Turkey. After an up and down session, the Dow tumbled 116 points, the Nasdaq fell 36, the S&P lost 16 points. The number of Americans who quit their jobs in April spiked 7% higher, a sign they're leaving for a better position. But advertised job openings fell 3% during that same month. And the Energy Department says the world has at least a decade's worth of shale oil reserves underground. General Motors is lowering the price of the all-electric Chevy Volt by $4,000, hoping to lift stalling sales. Be sure to tune in to Nightly Business Report right here on your public television station.